Hello, and welcome to another episode of WHU Inside Business. Today we are joined by Mr. John van Rossen, someone whose experience and expertise in such sectors as M&A or private equity make him a praised international consultant. After and during his MBA at Columbia Business School, John went on to work in consulting for KPMG in New York before becoming a partner at EY in 2006. Since September 2021, he's the co-leader of EY-Parthenon, which operates across 120 countries with over 9,000 professionals. And there he provides EY clients with impactful transactions and turn-on strategies that focus on long-term growth. Pleasure to meet you, John.
Lovely to be with you now.
So we know that today's markets are fast-moving and that new challenges and opportunities appear every day. How do you see basically the private equity scene currently? You have to deal with many changes, higher interest rates, ESG topics, inflation, geostrategy, trade tensions. What are, in your opinion, the biggest challenges?
Yeah. So look, it's an interesting question, right? The private equity market and private capital in general. I've been working in that now for over 20 years, and it's really developed as an asset class tremendously. You're right to say that if we look at today, the moment we're in now, we're seeing all these challenges that you just talked about. So particularly the monetary challenges, interest rates, etc. You're seeing regulatory challenges, but also wider societal challenges that are sort of being brought as well, like ESG and sustainability and the green transition that's being brought to private equity in their investment approaches and asset management approaches as well. So all of these things are challenging. And I think what you see in the industry, on the other hand, is an abundance of capital. Right? You're seeing a lot of capital is being provided. If you look at the recent stats, it's come off a little bit, but only in the last 12 months or so. But there is an abundance of firepower out there, dry equity, if you like, to do still the largest deals that will be available. So I think what we're going to see is private equity move into a new window, a further maturing of the industry. What we've seen in the very recent past as deal flow, the M&A market, obviously in volume, has come down tremendously, 30-40%, depending by geography and sector. But we've seen the market come down tremendously. We've seen, though, the flow in the mid-market has been quite resilient. So actually, there's been deals done in the mid-market, less limited by particularly the availability of debt, which was available for mid-market deals in those quantities. The large deals, though, have been very challenging to pull off. I think as we look forward, what we see is a maturing of the industry. We will see a shakeout. I think we'll see capital being increasingly allocated towards the top quartile players. And the top quartile players are those funds, those asset managers that really know how to transform business models and drive the business models to the higher edge of performance in the window that private equity typically has to do so. So I think it's challenging times for sure, but I think it will afford opportunities. And maybe I'll close with a comment. If I look back at the last sort of large existential crisis, if you like, in the financial markets, the global financial crisis, the best vintages came right at or after that crisis. So I think most of the clients I deal with and we deal with in EY-Parthenon are really very conscious that the inflection points are the important points to have a view on which categories of assets are interesting, which sectors, et cetera, and ready to deploy capital.
It's a really interesting take that you have there. Another question that I would ask you, because you being like the global lead of the firm, you deal with many different markets, and do you see changes or differences in that sense in the role of PE firms and how they basically transform companies, markets going forward in different regions?
Oh, well, for sure. I mean, look, the private equity is obviously, maybe in the context of your business school, you've kind of went through Barbarians at the Gate and sort of very famous publications like that. But the emergence of the asset class really comes out of the US, where it is a very mature, established type of investment capital. Very similar for Europe, slightly more recent, but not much, right? So quite well established. And that speaks to the maturity of the teams, the investment teams. So, if you look through investment committees of the houses that we deal with, there are going to be veterans in those investment committees who've been doing this for more than 30 years, right? That sort of builds judgment, that builds, investment nows. These people sort of have been around for a while and have a repeatable track record on good investing performance. Different by geographies, depending on how new the market is. Also, what we've seen is private equity has become much more sectorized in its approach. So, as I talked about the maturing earlier, what we've seen in the investment approach, they have built both on the investment side and on the side of the quality operations side, the asset managers, if you like. They've built teams that are much more sectorized, much more deep in their experience, both from a sector perspective, but also from a functional perspective. So they have more to offer the companies, the portfolio companies that come on board in their ownership. They can be much more of a good sparring partner for the management teams that run those companies. So I think that certainly there are differences that we see there, but I think private equity, particularly in the mature markets, have moved a long, long way to customize their approach to the different segments in the market.
Yeah, with basically us, coming back from COVID, what do you think will be like, in every crisis there is a window for opportunity. So what do you think will be the window for opportunity for your industry? And how can you help transform it at EY-Parthenon?
And is that at the EY-Parthenon level or at the private capital, private equity level? Because for both, I think there is a window of opportunity, and I can pick them up both because they're related. So, I mean, EY-Parthenon obviously serves a wider client base than just private equity. But if I focus my question on private equity, private capital, right? What we're seeing a lot of opportunities now is if you have flexible types of capital, you can really start getting involved in situations, very opportunistic investment situations, where very prescribed capital that is really allocated with a very specific mandate is very difficult to compete. So what I mean with that, we're seeing people who can move across the capital structure right now with mezzanine type funding, hybrid type funding, equity, pure play equity, but different types of equity, you name it. We are seeing players who can straddle that entirety of the capital structure. We're seeing those do some very interesting deals right now, where there is less dependence on traditional debt to make the deal happen. So we're seeing those situations. We're seeing sovereign wealth emerging as well as a category in the private capital, who obviously have different ways of looking at assets, at different horizons of investments, et cetera, et cetera. So there are interesting deals to be done, despite the M&A volume overall being low and down. The other thing not to forget is one of the lowest risk way of deploying capital for private equity, the LBO funds in private equity, is really compounding its current holdings, its current portfolio. So what you're seeing a lot is bolt-ons. So expanding the existing portfolio company by buying, sort of adding new companies, so acquisitions, but also investing into the portfolio company to transform it quicker and with a further scope than was initially expected, which also drives a return on equity. So there are different ways to ultimately drive your return on equity, which is ultimately the commitment of the private equity investor towards its limited partners, its investors.
Yeah, really insightful. Given the importance, we often see it, with all the big firms promoting ESG, and also the lawmakers do it. And even, as at our university now, it is more like even the curriculum, it is important for us to know about it. How do you see the importance of ESG and sustainability topics for private equity? And what would be possibly the effects, on valuations of companies and long-term success in that sense?
Yeah, so look, let me pick up your question in reverse order, right? So if you look at the valuation impact of ESG, and there's a lot of academic research done around this, right? There is, I think, now a pretty good body of evidence to suggest that, there is a premium for the players who are seen as ahead of the curve on the ESG agenda. I think to understand ESG as an issue, it is a very broad field, right? It covers a lot. In fact, some of my clients resist using the term ESG, but break it down, and particularly sustainability is an agenda almost in itself, right? The green transformation, etc. That those things are private equity is certainly not insulated from that. What we're seeing is a real shift in behavior in private equity in terms of prioritization of understanding the ESG agenda of portfolio companies that they're buying into. So this goes to the diligence before they acquire a company. And obviously, as EY-Parthenon, we get involved with that. So to your earlier question on the opportunities we get out of the phase the industry is in, we have really expanded our skill sets and we've expanded our services to support private equity investors to really do that diligence properly. So the breadth of how we go to market with them. But it goes all the way into owning the company because the change is really made. So different profiles around sustainability are made once you own the company. And I think private equity is very alive to that. The limited partners behind private equity, don't forget, ultimately private equity behind that sits pension funds, sits institutional investors, etc. And they are very vocal about what they want to see. So private equity is very much involved in the ESG agenda. It is really much on the mind of investment committees ultimately as they make investments. And it's also very much on the mind of the operational teams that private equity have as they try and improve the ESG profile of the companies they own. So that's here to stay. Maybe last comment, particularly the sustainability side of ESG is really throwing up some very interesting investment opportunities. Where particularly companies that have that premium or the potential to sort of express that premium in valuation. The green transition is opening up investment slightly more towards the infrastructure funds today. Think about renewable energy, etc. And we've in Parthenon we've doing a lot of work there with clients, really very eager to invest in those type of categories. So very interesting space.
You picked up on the LP landscape that we currently have. How do you see it? Currently, we've all seen it, read it in the news. With the Middle East becoming more interest. The sovereign wealth funds opening themselves up more, and also basically publishing, where they're invested in. And what is your personal outlook? Short term or mid term, in the future of the private equity industry when you see, the many challenges that we have in this current market space, but with LPs from other sectors of the world are now joining.
Look, I think, as I said in my opening statement, I think that the industry is maturing. It's been maturing all the time since I've been involved with it. So the challenges today are going to shape the industry further. I wouldn't see Middle Eastern money and sovereign wealth per se as competitors. You can't forget that a lot of the investment base of private equity has always been Middle Eastern money. They have always been limited partners in all the top quartile funds. There is a significant amount typically of Middle Eastern money. The sovereign wealth funds that we have worked with are very savvy. They don't tend to compete with their own money. Mm-hmm. So they are very, as we work with sovereign wealth, they're very, very specific. And that's broad. It's not just sovereign wealth. It's also, don't forget, we have a lot of long-term capital funds that could be either family holdings, high net worth, or otherwise. They're also quite savvy to pick out the investment categories that fit typically less well with an LBO model. And an LBO model and most LBO funds are pretty prescribed in their duration. So they typically have a 10+2 type of fund mandate, so they can invest and liquidate the asset in the 10-year, possibly extended by 2 years horizon. That horizon is very defining on your approach. And what you'll see with sovereign wealth and other investors, they try to veer away from that. They will go either for assets that will need a longer transformation period or otherwise, or that fit with their strategic objectives. In sovereign wealth case, either as a country. So many of the Middle East investors we've worked with are very interested in assets that fit well with their own strategic objectives as a country, either promoting employment in their country or bringing know-how to their country. But there is an angle there, but very specific to them, that LBO funds would not have. So that veers them to other assets. So I'm not sure competition is a threat here. I think it is, it is a very viable other way of looking at assets coming to market.
Yeah, I mean, that's the whole synergy thing that basically they can build up from there. But talking about synergies, that'll be a great pivot to my next question. How is EYP basically supporting its clients and overcoming possible challenges, and how quick are mostly the companies to adapt? And what is your approach there?
Yeah, it's interesting. Look, and it really does depend on sort of whether you want to answer that question with a private equity, private capital lens, or whether you look at it more broadly. So EY-Parthenon, again, we work across private equity, but in the wider corporate space as well, obviously. Private equity have always had to transform and had always had to express value, right? And you've probably seen all the research done, including our own research, that has sort of evidence that value, driving value, for a while already has not come from financial engineering. It hasn't come from buying cheap and selling more expensive. That those factors of driving value have gone, right, largely. So it's moved towards you really need to be very good in transforming a company, in expressing the value, the unexpressed value potential that sits in the company, right? And you'll see a lot of the funds have built up a lot of in-house knowledge on how to do that. So that's kind of where the business has gone, I think, right, over time. And if you look at the wider environment, corporates, um, there is another horizon towards driving change, I think, and this has been a very difficult period for corporates. You come from the post-COVID period, which for all of us, as you said in your intro, talking about technology has been a shock for all of us to work through, right? But now you look at an environment, an economy that is transforming very rapidly. Right? We're seeing very big factors. If I sort of limit those to the world of work, right? We're seeing on the talent side, we're seeing massive shifts, right? Not just how talent thinks, but how what talent wants when it works with a company is a very different contract than it was in previous generations, right? So that's one factor that weighs heavily on our clients, but also the use of technology. And I think we believe that we're at the beginning of seeing the actual impact of what technology can mean, particularly in the productivity drive that all the corporates are going through right now. That's a massive transformational catalyst. So if you put all of that together, we are working a lot with companies that have been thinking about, number one, how do I get match fit? How do I come to a period that is probably economically going to be a little bit challenging? But then secondly, how do I get myself ready for the more fundamental step of tomorrow's world, right? The big transformation. And that is wildly interesting work, I can tell you. And private equity is what one part of the client base. Their advantage, I guess, is that they're continuously transforming companies. So it's not an activity they pick up once or twice in the cycle. They do this all the time by necessity. But I think corporates are now certainly doing that work as well.
That was really interesting, especially the part about transformation. And my next question is more on a personal note, and it's more about your personal transformation that you've overcome over the years as a professional. So, what principles guide your approach to leadership? So, how do you balance basically the interest of, for example, shareholders, clients, and your employees in the decision making that you do?
That is a continuous balancing act, right? And I think wanting to balance something, but executing on it and getting the balance right is very, very difficult. And I think one of the things that I've always tried to do is make sure you have voices around you that bring very diverse points of view and that share those with you openly and candidly, so that you have a good understanding of how a wide array of people that you work with in the organization, that you work with as clients, but also, we're a partnership, that you work with as fellow partners. Really understand those three constituencies. I always think about it as a triangle that needs to stay in balance, right? They need to be equal parts. If we don't have great talent in our firm, right, that will really want to work with us, that are have the passion for the firm that we all have as partners, If we don't serve the best clients, we don't get the talent, right? All these things have interdependencies, and then ultimately, we want to make a reasonable profit. We want to run a partnership that does well financially as well, so that the triangle works, right? And that is kind of the way I think about it. It's the how, really. That's the art, and that is, always checking in with key stakeholders, understanding where people are. And I can tell you that's a dynamic process. It changes all the time, which makes it fun.
Yeah, I'm talking about talent, attracting young people to work for EY-Parthenon. I mean, it's a big concern for many companies, going through transformation, and your main job is basically to transform companies. How do you transform your own company?
Ah, that's to some extent a loaded question, because you might have read some of the media around our company. Look, it's funny if you look around. My career is in sort of, in some ways, a short career in the lifespan of an organization as EY, right? We've seen our EY grow tremendously, both in scope of services and number of people, etc. So I'll then sort of put a lens on EY-Parthenon, which is a relatively young business in our portfolio. The strategy consulting business has really grown tremendously from only a decade ago, about less than 1,500 people or so, to we're almost touching on 10,000 people today, right? Now, size is not everything, but it gives you scale, it gives you scope, it allows you to attract some really interesting clients and projects to work with. So that is kind of the mission we're on, as a firm, and building EY-Parthenon further. And so far that's going well, and we're trying to continue that mission as we go.
Great. So for the last question, could you give us a piece of advice or personal message, to that helped you throughout your career in your day-to-day work? Mainly because as a student in university, we mainly get taught the principles, but somebody who has basically, you went to business school, you then went on to work at a company and rose to the ranks. It would be great to see like a piece of advice that you received or that you took by your heart.
Yeah, I mean, look, it maybe it kind of it fits with what you asked earlier, right? Uh, every business is different in many ways, but there is some commonality, right? And I think one of the things is, someone always told me, stay very humble, right? Keep your humility. And when I sort of unpick that, and these are things sort of that you kind of develop, that fit with you individually or not, but you need people around you, whether it's from a career development perspective, whether it's from a strategic perspective, whether it's running the business. You need a array of people around you that you have very trusted, deep relationships with, but that are very different to you. And frankly, you should seek people out that disagree with you as well. Um, and that will give you a rich sort of level of input as to whether it's the direction of the business, whether it's the direction of your career, etc. They'll put a mirror in front of you that sometimes is not the mirror or the outcome you want, and it will take time for you to adjust to other positions. But that is, I think, what makes you better as a leader, better in your career, better in any way executing. And frankly, over time, you learn that ambiguity that introduces is quite fun. Actually, it makes it a bit richer as an experience, and it makes your what you get out of work, the recognition, what you get out of working with your colleagues, etc. It makes it a much richer experience, which ultimately drives you on. So I think, if there's any advice I'd give you all, maybe it would be that, stay humble and express that by really listening to people, and seeking very different voices and diversity of voices around you.
Yeah, this really goes full circle. Even if you look at your LinkedIn bio, it says, growth doesn't happen by chance, whether it's personal growth or business growth. So yeah, it then makes it all makes sense now, to take everything in, and hopefully this was really useful to our listeners. And I want to wholeheartedly thank you from the entire WHU Inside Business team to take the time to talk to us today.
My
Thank
pleasure.
you.
Lovely
And
to
yeah,
be with you. And look, I hope it goes well with all your interviews, and you get a lot out of it.
thank you so much. And
Thank you.
to the audience, also thank you for listening to us. Hopefully, we will catch you the next time. Bye
Great.
bye.
Thank you very much. Bye now.